Okay, now I don't know if we can talk about this or whatever, but I'm curious. Let's say, I've got the all-in-one loan and me and my husband, life happens, things are topsy-turvy, we lose our jobs and our money. What happens?
Mercy. Well, actually, it would protect you in a lot of ways because if you've had it for a while, your line of credit is available. So in those months that you might not have any or enough income to make your mortgage payment, you still have the line that's going to cover it for you. So as long as you have available credit with your line of credit, which is still going to pull out the interest. Now you don't want it to be that way forever. Anytime you own a house or have a mortgage, but while you're out looking for new jobs, you're still going to be protected. But also, if somebody was to decide, hey, this isn't for us, we don't, it just isn't for us. You can always refinance out of it and go into a conventional loan. Okay. Now, we don't really see that ever happening, but you can do that.
It's there, yeah. Because, life does happen, and, they may be able, sometimes, they need to, not finagle, but their bills.
And that's what makes the all-in-one loan great, though, because life does happen. And so if, for the last 2 years, if you've been paying so much down on your principal, because one thing I remember I did one simulator and at month 18, the person would have gained $6,000 in equity that they don't have access to.
Wow.
Because you can't really do a HELOC, unless you have a certain amount of equity. So, on a standard conventional loan, even if you've paid extra towards the principal and you've gained $10,000 worth of equity, you don't have access to it unless you go out and get a HELOC, which you have to have more than 20% equity in your house to even do that to begin with. With the all-in-one loan, at month 18, you probably paid it down maybe $30,000 or $40,000, so you have access to it right away. So if something like that happens and you have medical bills or something going on, and there's a family emergency, you can just pull that money out and that equity's there. You don't have to apply for a new mortgage. You have access to it, unlike a standard conventional loan.
Okay. Wow, that's very good info there to know.